Good morning and welcome to Business Morning here on Business Day Television. It's Thursday, July 24th, 2025. I am Destiny Momo.
And I'm Deborah Eze. Thank you for starting your day with us as we bring you clear and data-driven insights into the forces shaping Nigeria's business and economic landscape, from policy shifts, of course, to market trends.
Right now, let's move to the first conversation for today. Nigeria's debt profile is set to expand significantly as the Senate has approved President Bola Tinubu's request to secure over $21 billion in foreign loans. According to the presidency, the loan, which is part of the 2022 to 2024 borrowing plan, is aimed at financing key infrastructure projects, enhancing energy supply, and also supporting social investments.
But the approval has sparked fresh concerns about debt sustainability, interest rates, and the country's ability to repay amid rising inflation and persistent currency depreciation. This morning, we unpack what this borrowing means for the economy, businesses, and the average Nigerian. With us in the studio is Mohammed Akonji. He's our Business Day in-house analyst.
Good morning, ladies. Thank you very much for having me.
Good to have you.
Good morning. All right, so let's go straight into it. What was your initial reaction to the Senate approval of the $21 billion loan? And do you think Nigeria is in the position to make this level of foreign debt?
Sure.
Okay, thank you very much again for having me. So I think it's a two question. I'll try to be able to address them as clearly as possible. So first is, remember when the 2025 budget was actually passed and signed into law? We have a deficit already. Okay. There was a deficit in the budget. Say that the revenue we are expecting is actually not enough to be able to meet all our expenditure, the 54 trillion. So it's expected that the shortfall or the gap between the revenue and the expenditure will actually be met through majorly borrowing, local and international. And so this is why it's not unexpected. What was just released by the Senate, which the House of Reps also be able to approve yesterday, is now the Nigeria's external borrowing plan between 2025 and 2026. And so I feel like it is in order, just like the question Deborah asked. It's actually in order to actually be able to meet the shortfall, as I said, that we have in our budgetary provisions. Now, is it actually, because apart from the 21 billion, I'm sure we see there that the government is actually talking about that. They're also be able to be denominated in other currencies, in yen, in pounds, and I think it was $21.19 billion.
Yeah.
Then that's from foreign direct loans.
Okay.
4 billion pounds, equivalent of that, 15 billion yen, and about 65 million grants that the government is actually talking about, as well as basic domestic borrowing. So all these, just like I said, are actually needed to actually be able to meet critical sector of the economy. And we are not the odd one out. It's like a global trend. And what the government, the presidency, the National Assembly is still insisting is that we are still within our fiscal threshold. We are still within that particular threshold of debt to GDP ratio. So I think the foreign debt is very much in order, and the rate at which the government is actually talking about. So the question there, which maybe we're likely going to be able to get to, is the interest part. I think you mentioned I might be able to get to that. Will it not be able to put more vulnerability to us? But as I said, it is expected because it's actually in line with the global best practice.
So do we know how the loan is structured?
Okay.
Like concessional and semi-concessional or commercial? And more so, what does this mean to our repayment obligations?
Okay. So first, the loans, they are long-term. It's about 20 to 35-year repayment period, and they are concessional. So by concessional, it actually means that the interest rate is very, very low. Because from institutions where we are getting them from, World Bank, Africa Development Bank, Islamic Development Bank, Japanese Investment Promotion Council, I think the loans actually spread. Just as I mentioned, so we have the dollar-denominated part. We have the yen-denominated part that we get from Japan. We have the pounds-denominated part, and then you have those loans that are actually structured across board in that way. So, as I said, it's a long-term loan. Repayment is, to between like minimum of 20 years and maximum of 35 years. and they are concessional. Concessional simply means that interest rate on them is actually very, very low. So that tends to be able to reduce element of vulnerability that we might likely be able to put ourselves into in that particular regard. Of course, that doesn't mean we need to be able to raise the flag, in terms of the mounting debt that we're talking about. I think I was there with Deborah, it was not 2 weeks ago. We were talking about our debt. So that debt now is about more than 50 trillion naira.
Wow.
That's and we are adding these into the pool that we have already, and that's the naira. Part of our domestic borrowing. This is more of external borrowing as we're talking about, not domestic. But if you see some of the components of what the government want to use it for, as I said, the target of this is to be targeted towards infrastructure. The second phase, the first phase of the coastal road will also be there. Then to be able to target health and human capital development. So I think the government is also trying to be strategic in terms of where the fund will be channeled, to eventually. So I think that is what the Senate themselves, the Senate, which is that institution that actually be able to approve the request from the presidency to ensure that they be able to provide that oversight, that it is well channeled or the funds actually used for the purpose for which they are here marked.
Oh, wow.
So I think it is that. So what I can say, just like the question Justin asked, is because it's a long-term and concessional loan, so it tends to be able to ease that short-term pressure, that would like to be able to pay. But the implication, as I mentioned, is that it's be able to add to our long-term debt obligations. And it's something that we needed to really be able to check, because debt is always a very contentious issue. When we talk about the government is actually borrowing again, and you be like, but you find out on the final analysis there is that the two houses, the two chambers of the National Assembly agreed on the fact that the plan that was actually drafted by the presidency was actually quite strategic enough to be able to address some of the gaps that we actually be able to have within the country.
All right. So many, like you mentioned it, so many analysts have warned that Nigeria's rising debt servicing cost is actually on the high rates, because I would actually say we don't need borrowing right now. So can this loan deepen our fiscal vulnerability?
I think that's what I mentioned now. I think maybe Deborah said, you don't think we need a loan?
Yes,
right
I don't
now.
think so, because
we need it. Just like, so as I said, the budget is already on a deficit budget. I don't know. So it's more or less like saying you have a plan already for this year that you wanted to spend 1 million. Plans, and then we look at it on paper, it was good, it was strategic, and it was fine. But when we look at the revenue that you have, it is just about 500,000. I'm just saying. So there's a shortfall already to achieve your target and the revenue. So what do you think you're going to do? Maybe as individual, the next thing could, borrowing is one particular thing that you might be able to target. Yes, you can also be able to beg. I'm just talking about individual. But for government at that particular level also does those things. The government can go through taxes. The government can go in forms of sales of foreign assets. But one important way to be able to meet up the shortfalls that you have, just like I said, is through borrowing. But the question, just like I think the question she raised about that is, I agree, it will deepen fiscal vulnerability. They are at concessional rates. But I mentioned that as well, that if you look at the current level of domestic, we are not even talking about domestic borrowing. That one is about 149 to 150. They'll actually be able to have there. And then this is also an addition that will actually be able to pile up more on them, on what we already have. So I know it will definitely be able to do that. And that is where we needed to be able to put government to account, when to get these loans. As I said, it's a global practice. It's a global standard to ensure that when you have such a shortfall or you have such a gap, you go to international multilateral institutions, World Bank, IMF, AFDB, that you get loans from, to be able to settle some of your projects. Your project provisions or budgetary provisions that you actually be able to have there. So I agree very well that would actually be the case. And with servicing costs, just like you said, debt servicing costs is very, very high. I think now, for every revenue we make now, we're paying close to like about 85 to 90%.
Oh, wow.
For every $1 now, close to like, or let's say for every 1 naira, or for every 100 naira, 85 naira thereabout is used to service debt.
But now on this that you just said, now how might this affect all our rates, talking about inflation. Interest rates, and also exchange rates?
So of course there will be macroeconomic impacts. we've seen some of those macroeconomic figures, released by the institutions. If you see inflation, at least it moderated downward, it decelerated to about 22.22%. At least the third consecutive deceleration that we've seen. We've seen the central bank as well hold the rate, for the fourth time. Sorry. Okay. Then maybe Naira as well has actually remained a bit stable. And then we see that maybe we're gradually going to be able to go towards the federal government target of the 1,500 Naira to $1 arrangement. Yes, it is. But large-scale borrowing like this, one basic economic theory will tell us that it is when you have too much money in the economy or too much money in circulation, it is likely going to be able to induce inflation, likely. And so just like as much as possible that we needed this money for those projects, as I said, don't forget, it is a productive loan. That's actually the target should be, not a consumption loan, not just for us to be able to pay salaries or for us just to be able to meet up, obligations that will not be able to repay itself. But when we'll be able to put it into investment, into a capital project that can at least repay itself, we're having a debt that is actually allowing us, we are borrowing money such that we have a plan that the debt itself is actually be able to repay itself. So I know one thing about that is inflation could actually be on the rise if you're not careful, and that's why I said my bank needed to be able to check as much as that. But don't forget that some of this money, and at the same time, they may not be able to come in not raw cash, not all of them. Some of them will actually be projects, buildings, can actually be housing projects that will actually be worth this amount of money. So yeah, it will be able to have that, on a basic level to ensure that that particular impact can be there. So I just feel like, but at the same time, it is also needed to ensure that investors' confidence is maintained. I think we'll also be able to need that. So I bet in the final analysis, yes, inflation can actually be affected. Interest rate as well, because once inflation started, why the central bank held interest rates for 27.5 is to ensure that yes, inflation is not yet, we are not yet fully clear, out of the hoods yet. So we cannot just be able to reduce the rate. But if those funds are actually be able to use efficiently, for those infrastructure, I believe that they could be able to support long-term productivity and allow us to be able to stabilize most of our macroeconomic indicators.
All right,
so I believe they should be able to allow us to do that.
Okay, so the government have actually said that they need these funds for infrastructure and social investments. Do you think we have enough transparency and accountability to actually make sure these funds are put in the right place?
That is and I think thank you very much. And that's exactly the question that, that's the $1 million question. That is the critical question that we need to ask to ensure that, because this is not the first borrowing plan. Every year we have the fiscal, this is 2025-2026 borrowing plan. The previous ones, have we been able to see the impact? That is where the question actually lies. And when the Senate that approved theirs on Tuesday, the House of Reps gave the approval as well yesterday before they went on their recess. The question, and I'm sure people were actually throwing at the National Assembly members, that the honorables and the senators, is most of what the government mentioned there, Eastern Way Corridor there's a road project from Port Harcourt to Maiduguri, the first phase, second part of the Lagos Coastal Road, I think is also be able to be factored in. And then about a percent of 7 million. And then most of the senators that have stood up felt like they are able to be able to see a well-detailed plan as to what the government wants to be able to use the money for. But it's always been the case anyway. So I think transparency and accountability is still a very important thing that the government needed to be able to, it's an important currency that the government needed to be able to throw out there to the people to ensure that people will not just be able to grow panic whenever they hear, the government is borrowing again. And they can be able to see that, this particular thing, those money is actually used for projects that will actually be able to benefit the lives of average Nigerians. So I am sure that is actually the major thing there. But one way to be able to do that, that's what I feel like, strengthening public finance framework where there are monitoring mechanisms to be able to see what the government is actually doing will actually be able to go a long way to entrench, transparency and accountability. But I know it is a very important challenge, in that regard to say, hope it will not just go down the usual drain that previous ones have actually gone down to.
So you've already delved a little bit into the question, but I still wanted to throw more light to ascertain if this whole process can bring about growth? Is it bringing about growth, or do you sense some sense of stagnancy, at some point? Or what do you actually think?
So, borrowing generally can stimulate growth.
Okay.
If it is just like I said, if it's actually directed to the productive sector or the critical sector, that will. So it's not like, I know people will also be able to mention borrowing is not bad in itself. It's exactly what you actually be able to borrow for and what you channel it into. So, of course, that is actually the essence. The goal of the government is just to be able to ensure that by targeting this particular funding, this borrowing into, transportation, energy, education, human capital, infrastructure, we will be able to spur growth. You'll be able to have more productive segment of this productive segment of the economy that will be able to contribute to the national GDP, and that allows us to be able to pay back the loans. But if the question the brother asked earlier, if we're still battling with transparency and accountability issues and integrity issues as to where the funds are channeled into, what are they actually be able to be channeled for those particular purposes? Just like I said, the senators are actually at a bit loggerhead. Maybe a bit of loggerhead as to say, we look at the plan, from the government. I think there is a Senate committee on local and foreign borrowings that tends to be able to look at the plans before giving the approval, before it was sent to the floor of the National Assembly, at the plenary where it was given approval. So, the goal, of course, should actually be to be able to induce inclusive growth. That should be the goal. But if some of those structural bottlenecks that we have, some of the underlying fundamental challenges that we still have there may likely be able to defer the growth if we are not careful. It might likely be able to do that. The government is trying as much as possible to actually be able to boast itself, to say, yes, these will allow us to actually be able to achieve our goal of, be able to meet the welfare of the people, meet the welfare of the people, improve the living standards of the people, and ensure that the government is actually able to trickle down, the dividends of democracy that the government actually promised. Sure. But it must actually be done within the right framework. That's why I'm actually able to talk about public finance framework, where we have a more transparent mechanism to be able to see from start to finish how this is where the loan comes in. The government wants to do this project. They've mentioned those projects, as I'll be able to mention. The projects are there. You'll be able to look at the document actually released, several of them, and then see that at the end of the day, by the time we actually be able to review the performance of the budget, which is actually what this is actually taken for, we can be able to lay fingers to those things to say, yes, this project has been achieved. This project has been achieved. Don't forget, at this moment, some of those projects that we are talking about, we are running 3 projects at the moment in this nation. 2024 budget is still running it till December this year, because some of the capital, especially the capital components, I'm talking about projects, the government that wants. So they will report, the government were not able to, the government could not actually be able to release funds to be able to provide those capital projects to implement them. And that's why it was actually, so initially it was extended to June 30th. Now it has been extended again because they were claiming there's no money to do that. And then it will be like, this has been provided for, this has been budgeted for. So what is actually happening that we are not seeing those projects, coming to terms? And that's why we have 2024 budget, the approved budget. The supplementary budget of 2024 is still there. Then the 2025 budget is still running. 3 budgets that are running simultaneously. So that is where transparency, like the people asked earlier, and accountability is very important. That might likely be able to impact us.
So let me ask the final question before we let you go. What are the alternatives to this borrowing? Do we have to borrow? Like I said, I don't think we need to borrow. Because this morning in the dailies, it actually said we need extra billions of dollars to complete the Lagos coastal road. It just keeps piling up. It keeps piling up, and the IMF, I think last week, actually waived off the COVID-19 loan. So it feels like when we are trying to come out from some we are actually entering the other some. So, what are the other ways we can go around this other than borrowing?
So, borrowing. Okay, maybe I'm just going to I think I put about 3 or 4 that I feel like we could use. Yeah. One way could be public-private partnership. Okay. But there could be a limit to that. The government coming for, when it comes to infrastructure, maybe we allow private high net worth individuals who have quite enough can partner with the government to be able to provide those. But experience has shown to us, look at Lekki toll gate there. We still know the losses that the company actually incurred as a result of what happened. And then, so PPP could be another arrangement, especially in that regard. But most of all these multilateral credit institutions, don't forget all this IMF, World Bank, AFDB, were actually created for growth and development purpose of countries. That's why countries are allowed to go to them. You also contribute there. You have your more or less like a voluntary contribution, your contributions, which allows you to be able to take out from them. So I would say borrowing is still part of that. But if you use that PPP, tax collection, the tax thing, maybe that's another thing. So ensure that we can be able to widen our tax net. And enough people only want to be able to evade tax. We all know it's always a very big challenge. So the tax to GDP ratio in Nigeria today now is still about 8 to 9%, which is very, very low. Wow. You know, even by African standard is about 15 to 18%. But in Nigeria, only very, very, very infinitesimal amount of people, number of people, you know, actually be able to pay taxes. So I think that is that. And maybe the other one too, which is can be government raising bonds, which is also part of this, you know, green bonds, diaspora bonds, and maybe these are some of the other strategies that the government can use. But I think I just want to be able to convince borrowing is not totally bad.
No, I'm not saying it is bad. I'm saying we are borrowing more than enough, and it feels like
I don't think I don't think so.
Okay.
I don't think it's not okay. I don't want to say more than enough because we still actually be able to. So if you look at the budget itself, it's 54 trillion. Okay. If you look at that in dollar terms, 54 trillion. That's close to like about $48 billion or thereabout. That's the budget. So what I'm just borrowing now is just 21 billion.
Just 21 billion.
So the thing about borrowing is if it's actually being put into good use.
Exactly.
It's not bad because every businessman out there.
You mentioned something. The 2021, 2024,
productive things.
2023, 2024 rather. We've not seen how that money was being put in use. And now we are going to the 2025, 2026. That's just my take. I don't think that is what we need at this point.
So because of those budgets that we want simultaneously, I know they may likely be able to create that you know, loss of confidence, you know, that are we really sure this is the way to go? But we also need them on this project, just like you said. I think what Destiny said about even businesses need loans. Government also be able to need that to provide some of these essential services. So that is
make it come fast.
And then to ensure that it is actually used for the purpose that is actually directed to. I think that is very important. So I think I will just say in a final analysis that the borrowing should be seen as a tool, just like other ones for that development. So the sustainable development that will likely be able to come from it will demand, you know, government has to actually be innovative. Government has to be able to, you know, bring about impactful reforms, and more importantly, entrench accountability in what they borrow.
Thank you so much, Mr. Mohammed. It was really, you know, insightful to have you here this morning. And we're speaking on the $21 billion loan that was approved by the Senate yesterday.
Thank you so much.
We'll go on a quick break now. When we come back, our second part of the conversation is going to be up. Just stay with us. Welcome back. Yeah, welcome back to Business Morning. Now let's move on to our second conversation for today.
Today we shine a spotlight on innovation. Not just the spark of an idea, but the tough, rewarding journey of turning that idea into a scalable, sustainable business. Nigeria is brimming with talent and creativity from local inventors developing renewable energy solutions to techpreneurs building apps that solve uniquely African problems.
But how do we bridge the gap between invention and commercial success? Joining us this morning is Babajide Duro Emmanuel, is the Group MD, TCOM Limited Strategy and Transformation Consultant. Good morning, Babajide. Thank you for joining us on Business Morning this morning.
Good morning. Thank you for having me. It's a pleasure.
All right. So let's start with the basics. How would you describe the current state of invention and product innovation in Nigeria? Are you there, Babajide?
Okay. Yes. Could you repeat that again? What did you say?
How would you describe the current state of invention and product innovation in Nigeria?
Oh, yes. Thank you. At the moment, there's been a lot going on in the business space. You know, coupled with the state of the economy, right? Everyone is trying to invent something. Everyone is, trying to just make a headway. So this has really brought, a growing number of people to become more interested in uh, entrepreneurship because really there are no jobs out there. So yeah, and because of technology as well, I believe innovation is growing. Product invention is also growing, and it's quite a good time, and it's also a good one for the economy of the nation if these products and inventions actually thrive.
Oh, wow. So are there certain sectors like agriculture, energy, or even fintech, and where we are seeing more local inventions gaining tractions, and also why?
Oh yes, I believe I can't speak about I wouldn't speak about fintech
Okay.
just something acceptable, something uh something scalable. Yes. So it's not just so really the knowledge is not there. Young people just come up with ideas, and generally not even young people, adults, and they struggle for some time. Also there's also funding as well. Yes, funding. But really that's the opportunities out there. You have your, so when funding a business, I know that's also linked to know-how, because really when you have a good idea, you can start from somewhere and really be funded by either your customers or family and friends, investors, then also ideas fail basically because basically because the people pioneering such ideas are not they are not they don't have a knowledge of that sector they are
Okay.
trying to get into, and so that also requires some level of learning and development in that regard. So
Okay.
I believe these three things, yes,
All right. So
are some of the major.
okay. So how important is market research at the early stage? Market research, how important is it at the early stage? And do you think Nigerian innovators pay enough attention to this step?
So here's the thing. I don't think Nigerian innovators, basically entrepreneurs, pay enough attention to. Did you say market research or product research?
Market.
Okay, yes, they don't actually.
Okay.
Just a few number of people, and this also comes down to knowledge and know-how as well, because some people think, oh, like it's just about having your idea and putting it out there. Then they realize that there's more.
Okay.
So, for instance, when you're starting up, like you have an idea and you intend on building your idea, something with your idea. The first thing is to develop what they call a minimum viable product. That's an MVP. So from this MVP, you are able to make research. So it's like an assumption. So your MVP is like an assumption. You're able to do your research. First, start with the people in your core group. Now that's either your family or friends, or people you could speak with in you, the kind of people you're trying to serve or reach. Try to speak with them, hear their opinions, and also do some research as well. So really, young people don't want to go through all that process. They just want to go from just the idea, and because that's where the work is actually, and that's where the actual work is, and most people don't want to give it that time or effort.
Permit me to ask this. Once an investor or inventor rather has a prototype, what should their next step be to scale commercially?
So, number one is that that's the first thing actually is to uh, develop a minimum viable product. When you develop a minimum viable product, you then you reach out to people in your network, just checking with them. What do they think about what you're building? Just get their opinions about things. Then another thing is really starting small. Actually, just start like start however small, however unclear. So I remember, for example, let me take a Nigerian company. Let me use Money Points because I have a bit of knowledge about how this started. So when Chosin started, it wasn't Money Points as we all know it today, like the consumer agency platform. It was Team Apt, and what they started with was they just wanted to they were actually a service they were service providers for banks and financial institutions, and but that didn't work well because they had a bit of some banks or some financial institutions didn't really accept what they were offering and all of that, and it took time and much labor to get to that phase of that's the market, that phase of scalability. So they recognized the opportunities, and because we were able to speak with they were able to listen to their customers, to their team members, and so they scaled to what we now know as Money Points. And now they do like over last I checked was over $14 billion transactions in a month, and that's like quite good. So what I'm just trying to say in the overview of it is that you just start as soon as you have your MVP, just start. And so there you now, there's much of in there lies continuous improvement, spotting opportunities, listening to people, and sometimes you have to also pivot because sometimes you might be wrong, and that might not actually be the actual product that or the actual invention that would scale. But from what you initially had, you're able to scale and pivot to the actual thing that people will accept. Yes. Mm-hmm. And that's how most businesses in the world actually are built. Yes.
Right. Finally, now, if you could give one piece of advice to a young Nigerian inventor watching this, what would that advice be?
So my advice is that what do I call it now? What do I call it now? I'm trying to think of that word. So the conditions, the conditions might not be right, okay. But actually, if you've got an idea, like with some of these things I've mentioned, like having a minimum viable product, it's not just about having an idea alone. You have to. It's not just about having an idea alone. You have to, find the purpose. What purpose is your idea serving? Okay. What problems do you want to solve? Then create a minimum viable product and just start in there. And when you start, don't think it's actually that what you think that don't be too fixated on your idea. Just start. Then over time, you're able to improve. You're able to scale or even pivot. So yeah, just start. And it's such a good time in Nigeria where new businesses are springing up, and it's a good time for you to actually start. Just start, and you will improve over time and be successful. Yes.
All right, thank you so much, Mr. Babajide. It was good to have you on Business Morning.
Thank you so much for joining us. Yeah.
All right. All right, we'll go on a quick break. When we come back, we are going to have our take on the issues discussed here on Business Morning. Stay with us. All All right, so Destiny, I'm just going to start with my take, and I'm just going to look straight into the camera and say it. I somewhat agree with Babajide. So the thing is, Nigeria doesn't have a shortage of brilliant ideas. We just have shortage of structure that, that believe in them. When I mean structure, we know amenities and the government, we don't have lots of backing from them. So if you're sitting on something powerful, for me, I would say you stop waiting for permission. Build it, test it, fail, pivot, and repeat the same thing until the market respects the momentum that you have and not permission. Because that's one thing. The market does not respect perfection. You don't have to be perfect. Rather, they respect the momentum of whatever it is that you're building. So that's just my take on this.
And I also agree with you on that, and I agree with our guest earlier. Yeah, he made a lot of statements, and he's citing making people know that they have to be consistent in dealing with these things that they do. Because, like most of the Nigerian businesses that we have, if they were not consistent, trust me, they will not be doing business today. So business is all about consistency. Because sometimes people just start a business, and over time they get bored and they think that maybe there is more profit in other businesses.
Is it boredom? I really don't think it's boredom. I still think it has to do with the structure. I'm actually a witness to that. It has to do with the structure.
No, when I said bored, doesn't mean like maybe they got, maybe they're looking at other people's business and seeing that these people are making profit and not thinking that they could still be patient enough to develop theirs. So they could come to terms with profit. When you spend money to make money.
But if I'm not making money, what I'm doing, you're making money, what you're doing. Why can't I join?
You have to spend money to make money. Some people just think they will start and then the profit starts rolling in.
Well, like we said, just make sure you build, you test, fail, pivot, and repeat the same process all over again until you get to that point or close to that point of perfection. Wow. And that's the much we can take on Business Money. And today, up next is Big Story. My name is Deborah Eze.
And I'm Destiny Mama. Keep watching Business Day TV. Good morning.